Assalamu alaikum, Ikra.
Walaikum salam, ma'am.
How are you?
I'm good. How are you?
I'm too good. Have you started any work on assignment?
No, ma'am, not yet.
Okay.
Ma'am, for each assignment, we have to follow the word rules, right?
Word rules. I didn't get it. Can you please
I
explain it?
mean, uh, I mean the font style and everything.
Mm-hmm. Yes. The best
We
one is
have
the
to be
Times
doing
New
it.
Roman, right? Yeah. Like,
Okay.
if we talk about the command verbs, and other than that, the style for the Word document should be, you can say Times New Roman. It is more appropriate.
Okay, ma'am. And it's all the rules in for the assignment. We have to follow all of them.
Yes.
Okay, ma'am.
You have
And
filed for
for
it?
the
Like,
sorry, ma'am, I did not heard you.
I said that do you have any file for that specific rules with you?
Yes, it's within the rules for assignment in the
Okay.
website.
Oh, okay, okay. Do you find any difficulty on those rules?
No, ma'am.
Okay. If you have any problem
And
related, you can definitely ask us.
yes, ma'am, for the assignment when I'll be doing it, so I will open that window and with that I will be doing it. So the font style, writing, everything we have to follow from there only for each assignment, right?
Yeah. Let's start with the lecture. Today is the second class for this course, and the last class is going to be in the next weekend, inshallah. So today we will be starting with the learning outcome number 3. We did the 3.4 and the distinction 1, but these are the one which are related to task number 5. Use the budget and actual figures to calculate and interpret variances. Obviously, this is related to the task question, but we have to discuss in detail that what is the budget and interpreting the variances, how we can do that. We will learn that today. So the first thing is variances. Now, this refers to the differences between the actual financial performance and the expected or the budgeted performance. Now, by reading these lines, it is very clear that what actually a variance is. In the other word, it is a difference. That is anything which you are going to expect and what you have already done. That is past and future outcomes. Now, these differences are typically expressed in both numerical terms, whereas in monetary values and the percentages as well. Now, this depends on us that in what kind of information we want to jot down. Are we going to do numerical calculations or the percentages one? Variances are used to assess how well an organization's actual financial result align with its budgeted or expected result. In the same way, when we align our decision-making skills with the strategic one and with the organization one, the variance also plays the same part. How we can depict the financial results which we have already achieved and the one which we budgeted or we assumed. Now, what is budgetary control? Now, it is a critical aspect of the financial management in the organization. It involves creating budgets, tracking actual financial performance against these budgets, and analyzing variances to understand the reasons behind deviations. Now, we will go through by one that what kind of variances and deviations are behind the budgetary control. And it's why it is a critical and crucial part of any organization because it's not easy. Already you have estimated stuff in the budget, and then how you're going to achieve it, what are the problems you're going to face it while achieving it. It is everything in the budgetary control. The first part or the first point says purpose and the content of the budget. Now, what is the purpose of it? Budgets serve as a financial plan and a performance evaluation tool. They help organizations set financial goals, allocate the resources, and monitor the financial performance. So this is the overall purpose of part of the budgetary control. And what's its content? A budget typically includes projected revenues, expenses, and cash flows for a specific period, often broken down by the department or the cost center. Now, it depends on the departments or the financial department how they want to break the budgeted sheets or budgeted content. It can be after 1 week, 6 months, 12 months, or even 3 months. It depends on us. Cash flow forecast. Now, cash flow forecasts are an integral part of the budgeting. They provide insights into the timing of cash inflows and outflows, helping the organizations ensure they have enough liquidity to meet their financial obligations. That is, your organization is having enough cash in hand at the moment in the organization to meet any calamity or disastrous situation. Even if any of the supplier comes into the organization and demand its credit payment, you are liable to pay them enough. And of course, it encounters all the inflows and outflows of the cash. The third is the budgetary control process. Now, it involves three steps: creating a budget, implementing the budget, monitoring and comparing, variance analysis, and in the end, taking the corrective actions. So, creating a budget is all about setting the financial targets and allocating the resources based on the organizational goals. So, we are going to see what kind of budget we are going to make first and see whether all the things are in place or not. We have to um, buy an asset or not. Implementing the budget, executing the plans outlined in the budget. Whatever, like whenever we make a budget, even our in the houses as well, in the home for the grocery purposes, we'll have to implement that, whether we are going to do that in rupees 5,000 or not. For example, monitoring and comparing, continuously tracking actual financial performance against the budget. For example, at the moment, inflation has been raised up in every country. We used to do the shopping, for example, in 5,000 real back in times, but now maybe we are able to do that in more money. So the value of the money decreases, but the actual money, the quantity has been increased. Variance analysis, that's again the differences between the actual and the budgeted one. And in the end, if necessary, making the adjustments or taking corrective actions to bring the performance in line with budget. We have taken all the precautionary measures. We are doing each and everything step by step, but we can encounter with any of the problem at any of the steps. So it's our like a duty to or responsibility to see how to overcome that problem. Then importance of budgets for the management. Now, performance measurement. They provide a benchmark for evaluating the efficiency and effectiveness of operations. That is, whatever the operations are going on in the organization, by measuring the performance of the employees, of the budget of the project, we can see how we can evaluate in the end the project. Resource allocation. Budget allocate resources where they are most needed. For example, at the moment we need more budget in the production department rather than in the R&D department. So we will fund that department specifically. Goal setting. They set specific financial targets that guide decision making. We cannot make random decision in any of the organization. We are having a budget at the back. We are having a finance resource at the back of us. Only then we are able to make a or execute a plan. If we are not having enough budget or we are not having enough cash liquidation, then we cannot pursue any of the decision in the organization, because whatever you are making a decision, what kind of a decision it is, we require money, we require budget of it. Communication. Budget communicate financial expectations to all levels of the organization. Definitely, we are going to communicate with all the levels of the organization and the departments. Only then we can implement on the budgets. What kind of budget, whatever the budget we have made. Types of budgeting. Now we have zero-based budgeting and incremental budgeting. It requires justifying all expenses from a zero base, promoting cost consciousness. That is, from zero, we're gonna opt for the further budget. And how this is gonna be done? Like, any idea? Like, if we discuss about cost consciousness, any idea of what? Basically, many of the organizations are quite aggressive and sensitive about the cost of any of the product in the organization they're launching or working on it. So they're quite conscious about it. So that is how they can even promote the zero-based budgeting as well. Just by grabbing the customer market, they can gain profits. Incremental budgeting. Adjust the previous budget period's figures for the current period, often leading to incremental increases. That is, we're going to compare the past result with the present one, and then we can predict for the future. Obviously, we want more and more. Advantages and disadvantages of budgets. Now, what is the advantage of it? Improve the financial discipline, goal alignment, resource allocation, and performance measurement. Now, these are all in the points. While giving in the answer in your task, we can give further explanations to it. Because obviously, this is the advantage of budgeting. And we discussed the performance measurement as well. Disadvantage can be time consuming. Obviously, it is time consuming. It takes a lot of strength and brain at the same time. Inflexible and lead to gaming when employees manipulate figures to meet targets. That is, the fraudulent people, the people who do corruption in the politics, even in the organization, they have the skill to just manipulate the figures. They can easily make the budgetary control or any of the financial statement fudged. The real or actual performance must be way too lessen, but they are going to show a very nice picture skew of it, that the organization is very nice. Calculating the variances. Variances are typically, again, this is we did discuss, but this is in a formula form. Formula says variance equals to actual less the budgeted. And when we have to calculate the percentage, when we did study that the variance is of two kind. One is of a numerical kind, and the other one is the percentage kind. So when it is being devised to you people that you have to calculate on a percentage basis, we are going to just actual minus budget figures and divided by the budget. So whatever the budget figure was into 100. That's it. And we are going to get the 100 percentage of it. Explaining the variances, that is the financial and the non-financial factors into it. Variances can be explained by both the financial and non-financial factors. For example, a revenue variance could be due to the changes in sales volume. This is the financial factor of it. And the other factor could be shifts in the market demand. Maybe the people are not uh, enough able to buy the product, and the demand, which was before price elastic, that is, you cannot change the price in that specific market. We are only going to supply the product to the consumers. It has been going to inelastic. So you cannot do anything of it. And that is the non-financial factors. Then an expense variance might result from the cost control efforts, that's in financial factor, or changes in economic condition, that is the non-financial factor. Till now, I am sure that you are familiar with the financial and the non-financial factors. Financial are all related to the money-based things, and the non-financial one, which are related to the then reconciliation of the budgeted to the actual profit. Now, this involves comparing the budgeted profit with the actual profit, taking into account all the variances and their explanation. Again, this is the further deviation, or you can say extension to the variance, that how we do reconciliation just by making the budgeted profit into then advantages and disadvantages of the variance analysis. It identifies problems, guides decision making, and helps improve the financial performance. So this is what the advantages of the variance analysis, but this is not in depth. While in the assignment, you have to give a depth explanation to it. Disadvantages, it can be time consuming and may lead to overly aggressive goal settings, causing employee stress. One more thing, if you are not able to find any of the topic on the internet, which is again not true, we always find topics related articles and stuff on the internet easily on the Google Chrome or even the Microsoft. What you can do is always search that topic on the YouTube as well. Now you will find a lot of videos on it. And when you start listening to those videos, you can just jot down the points, important points which are related to the topic, which you're going to discuss in the assignment. This is the also one way how you can just overpower the plagiarism cause. Other than that, whatever the things you have jotted down from the research articles, thesis, always give a bibliography of it, and it should be in APA style. I hope it's clear to all of you.
Ma'am, what
Yes, ma'am.
is
But then
APS
like
style?
Please one by one.
Ma'am, you mentioned APS style. Could you expand on that?
Yeah, we can have a lecture class on it as well, because at the moment,
Thank you.
yeah, I think I made that. Yeah, I explained to my other student, Sherlyn, and I'll just give the lecture to you people again. It's all about the bibliography because we don't have one style. We have many styles, but it is recommended APA to you people and an MPA as well. We will have a class on it, okay? Don't worry.
Got a lot, ma'am.
And what was the second question? Any other of the girl also talked?
yes,
Hera?
ma'am. I was saying that yes, ma'am. I was saying that in previous tasks there were two, three topics, not topics. I would not say topics, but yeah, some parts were not available on Google.
Mm.
So
Um,
I didn't have this idea of YouTube, but now you have given it, so I'm going to try that as well.
And one more thing, the topics which you didn't find the data on the internet, please send it to the main group or to Ma'am Kinza. She will forward to me and I'll provide data for you. No worries.
Okay, ma'am. Thank you so much.
To any of the students, if you find any difficulty in any of the topic, just text the management and they will just forward it to me and I'll make a document for you people. Okay?
Yes, ma'am. Okay, thank you.
No worries. And this is the conclusion part of your assessment criteria 3.1. It says budgetary control is a crucial financial management tool that enables organizations to plan, monitor, and improve their financial performance. Now, the variances are central to this process. Now, in this AC 3.1, we discussed about the variance analysis plus the budgetary control. Both of the things were discussed side by side, and they are the central to this process, serving as signals for the management to take corrective actions or make strategic decisions. The interpretation of the variances should consider both the financial and non-financial factors. Now, even in the task, when you people are going to be asked about the interpretation of the variance analysis, not considering the financial factor, other than that, we are going to discuss the non-financial one. And these are all the economic factors, like we're going to tell about the unemployment factors, inflation, and we discuss about the economic calamity, I think, in the above examples, and so on and so on. The things which are not having the financial factors in it, they are all called non-financial factors. Okay. Then we have assessment criteria 3.2, which says evaluate the use of different costing methods for pricing purposes. Now, because today is this, we are having strength in the class, again in the command verb, we do have that you have to tell about the strengths and weaknesses, judgments, important and similarities and differences, while in the assignment, just mention in in a paragraph and in the heading that these are the strengths of the XYZ topic and these are the weaknesses of the XYZ topic. This is more like it gives a clear picture skew to the examiner and to the assessors as well. And even it's easy for you people to jot down the answer rather than jumping up all the thing in one paragraph. Okay. Now starting with this topic, okay, the use of different costing methods for the pricing purposes. Now, the different costing methods for the pricing purposes is crucial for the business to set appropriate prices for their products or services. We will evaluate these one by one. The first method is, again, the direct indirect cost, which is a very famous and easy one. Direct costs are easily traceable to specific products, such as raw materials for a particular item. Indirect costs, like rent or administrative salaries, cannot be directly attributed to a single product. That is, the direct, if we talk in general, direct costs are the one which I can receive from you people right now. An indirect one, which we do get in the markets. First, the producer set the price of any product, for example, of a bread. Then retailers add the GST tax, market price to it, and then the final price of the product is executed in the market. That is what the whole process of the indirect costing is. Calculating the unit cost. Unit cost is calculated by dividing the total cost by the number of units. We didn't discuss fixed, I guess. Fixed costs remain constant. Okay. What are fixed costs? They cannot be changed. For example, the price of the assets, they cannot be changed in any of the market industry or even in the organization. And variable costs are what? They are the one which are changing over time. Maybe because of the calamity, maybe because of the economic factors or conditions in the market. Okay. And when we combine these both, fixed plus variable cost, we get the total cost. So what's the unit cost? It is calculated by dividing the total cost. And how are we going to calculate it? If it's just written just that fixed and variable costs are given in the question, we're going to add them up, both of them, and that is what a total cost is. And divided by the number of the units produced. The number of units produced is going to be in the questions provided to you. For example, if you produce 1,000 units at a total cost of $10,000, the unit cost is $10. Now, this is very easy. It's given in the question. We only have to apply and jot it down in the formula. Dealing with the overheads. The first thing is the full absorption costing and the marginal costing. Now, what is absorption costing? This method allocates both fixed and variable overhead cost to each unit produced. Obviously, whenever we produced each unit means 1 unit, 2 unit, three, four, five, and so on. In one batch, we produce hundreds of units. So each of the unit, like each product, is going to have its own fixed cost and its own variable cost. It cannot be accumulated batch wise. It is useful for the external financial reporting, but can lead to distorted pricing in some cases. Now, these are some cases which are related to the natural calamities. Marginal costing. Only variable costs are included in the unit cost. Fixed costs are considered separately. This method can provide a more accurate view of the product, of the production volume on the pricing. Now, if we discuss marginal costing, what it is going to be having the variable cost because that is the reason behind it. The variable costs are changing. That is why marginal costing, in the marginal costing, we do include it. And the fixed costs are considered separately. By separate means, it means in the calculation, we are going to consider the fixed cost, but separately. We're not going to accumulate in the variable cost, just like we did in the total cost. Total cost is the accumulation of the variable and FC, that is the fixed cost. But in the marginal, the variable cost is going to be accumulated. Then pricing. Now we have various kinds of pricing. The first one is cost plus pricing. In this approach, you add a markup, a percentage or fixed amount, that is what a markup is, to the unit cost to determine the selling price. When we have to depict a selling price of any of the product, we are going to do what? The markup of that product and the unit cost. And we did know that how we calculate the unit cost. We discussed that in the above slides. Now, this method ensures that all the costs are covered and provides a consistent profit margin. Obviously, when we're going to calculate it, we have to take the profit margin against them. Why we're discussing these? Because in the end, the task 5, we have to calculate these all. Marginal cost pricing. The selling price, what is the selling price? The price which we are going to sell in the market of the good is set based on the marginal cost, that is variable cost per unit. Now you can remember that fixed cost is always separated in the marginal cost only, not in the total cost. It is useful when there is excess capacity and no need to cover the fixed cost. This method can result in the lower prices, potentially increasing demand. So whenever we are facing the increased demand, for example, right now we are having winters in Pakistan, so the demand of the sweaters or the warmer clothes has been increased, although they have increased the prices as well. But what is happening at the moment? The variable cost has been increased. It depends on them that what so price they can charge us. Price takers. Now, who are price takers? They are the one which are related to the elastic demand of the product. Now, what is the elastic demand? When there are a lot of people, consumers in the market, and the producers are also in large amount. For example, bread is produced not only by one brand, bread is produced by various brands. So when any of the market, like industry holder, just raises prices by 1 unit, it is going to affect all the consumers because they are going to divert their money to the other producers because they don't want an expensive product. So they are the price taker. Whatever we demand, for example, for the bread, we want it for 100 rupees, they are liable to give that product in 100 rupees to us. And I believe we discussed about the price makers. No. On the other hand, we have price makers in the market as well. I just forgot to add that in the slide. I'm just discussing it verbally. Now, who are the price makers? They are the people in the market, in the industry, in the organizations, and specifically the producers who make the price by themselves. And they are the one which are the entertaining the inelastic people, inelastic demand. For example, the life-saving drugs. Now, it depends on the pharmacist, the people, whatever or what kind of price they want to subtitle to the product, to the medicine. We are liable to get that because it's a life-saving drug to us. For example, I'm having a sugar. So I'm gonna buy my medicine, for example, Sita, no matter at what price they charge, because it's my need. And the inelastic demand is always onto the need products, the needs and wants. Do you have a knowledge of needs and wants in the courses? Like what are the need products and what are the wants? Any idea?
Need products are the one that the poor also need and we also need, and the wants are like luxuries and such things.
Correct. So that's the whole concept. I just forgot to add the price maker concept. Please, um, you have to add that in the assignment. Then we have break-even analysis. Break-even analysis helps determine the level of the sales at which total revenue equals to total cost. Now, in a chart, in a graph, we are having a fixed cost, we're having a variable cost, unit cost, everything. What is a break-even? Break-even means your total cost equals to the revenue. That is just like an NPV. When we just fetch up the initial cost, from that moment, our profit starts to come. And the point where that meets the initial cost and the budgeted figure, that is known as the break-even point. Marginal costing. Again, we did discuss this as well, but this is the pricing one. It focuses on the incremental cost of producing one more unit. Prices are set based on these marginal costs, ensuring that the variable costs are covered and contributing to the profit. Again, we have to recover all the variable costs which are changing over time by time so that we can pursue with the profit further. Now, these are the evaluation of the pricing methods which we discussed today. Suitable for the business, the cost plus pricing. What's the evaluation of it? That is, it is suitable for the business with the complex cost structures or when the regulatory factors dictate the pricing. It ensures cost recovery and provides consistent profit margin. Now, these are the plus points, or you can say advantages to this method. Marginal cost pricing. Effective when there is excess capacity and it's crucial to cover the variable cost. This can lead to more competitive pricing, potentially increasing sales. When the motive of the business is to increase sales, because the product is not having that much revenue back in hand, so we are going to apply the marginal cost pricing and we're not going to use the fixed price. That's the point. When we want to increase the sale, why we are going to fix the costing? We are going to change it. Price takers, break-even analysis, and marginal costing. Now, price taker, this approach is most suitable in highly competitive markets where the business have little control over the pricing. Here, the focus shifts from the cost-based pricing to the market-based pricing. So whatever the market the consumers wants, the price of the product, we are going to give that. Break-even analysis valuable for setting a minimum selling price to the cover cost. It is essential for understanding that when a product will start generating profit. That is again, just like an NPV we discussed earlier. Marginal costing, it is useful for making the short-term pricing decision and understanding the contribution of the additional units to profit. The choice of costing method for pricing should be aligned with the organization's specific circumstances, such as market conditions, cost structures, and strategic objectives. Often, a combination of method is used to address different products or market segments. It is crucial to regularly review and adjust pricing strategies to remain competitive and profitable. Why? Because after each and every month or even 6 months, we cannot change the pricing methods. That is why we have to first do a research and then we have to opt according to the condition of the market. Is this clear? Is the lecture clear, people? Okay, thank you. That's it. Any question from today's lecture?
No, ma'am.
Thank you so much.